Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It is 2026, July 10th, and today the market mood is basically a polite dinner party where everyone is smiling while quietly checking the exits.
So, classic finance. Calm voice, emergency spreadsheet. We've got currency traders buying protection, India lining up a big dairy IPO, Japan watching inflation, SK Hynix testing AI appetite, and oil prices wobbling like my confidence after checking grocery receipts.
Story 1. Bloomberg reports currency traders are starting to hedge for a return of foreign exchange volatility after months of calm. The trigger is shifting Federal Reserve expectations plus elevated geopolitical tension.
The currency market went from spa music to horror soundtrack. When traders buy protection, it means they expect exchange rates to move harder. And nobody buys an umbrella because the sky looks adorable.
Exactly. For normal people, FX volatility can affect imported goods, overseas travel, multinational earnings, and any portfolio with global exposure. If the Fed path gets less predictable, the dollar can swing, and that can quietly change prices before consumers notice why.
Story 2 is much creamier. Bloomberg says Milky Mist dairy food may launch a 20.35 billion rupee IPO, about $213 million, possibly India's largest dairy sector IPO. That is not just milk money. That is milk wearing a blazer.
The simple finance version. An IPO lets a private company sell shares to public investors. In this case, the signal is broader than one dairy company. It points to investor interest in India's consumer economy, packaged foods, and middle-class spending.
I like consumer stories because people either buy the product or they do not. No one says, I am waiting for the beta release of yogurt. But investors still need discipline. IPO excitement can curdle fast if valuations get too rich.
Story 3. Sources say the Bank of Japan may raise its growth forecast while maintaining vigilance toward inflation risk. That combination matters because stronger growth can support markets, but sticky inflation can keep policy tighter than households and borrowers prefer.
So Japan is saying, good news, the engine is stronger. Bad news, the engine is warm and making noises. For investors, that can affect Japanese bonds, the yen, exporters, and anyone pretending currency risk is just a decorative footnote.
Story 4. The BBC reports chip giant SK Hynix raised $26.5 billion in a mega U.S. share sale, with shares set to start trading on NASDAQ. CNBC adds that the company has had a more than seven-fold stock rally over the past year.
Here is where I disagree with the easy hype. A seven-fold rally plus a mega listing can be a sign of genuine demand. Or it can be investors sprinting toward anything with an AI label like it is the last charging cable at an airport.
Fair pushback, but I would not dismiss it as hype. Memory chips are central to AI infrastructure, and public market demand for SK Hynix may show whether institutional investors still want exposure to the AI build-out beyond the obvious U.S. names.
Story 5. Oil prices wobbled after attacks on 3 commercial ships in a key strait, pushing crude back above pre-war levels. This is the part where your gas tank whispers, I heard you were trying to budget.
Oil is a cost input for transportation, logistics, chemicals, airlines, and food distribution. If shipping risk raises energy costs, inflation expectations can rise, central banks may stay cautious, and households may feel it through fuel, travel, and delivered goods.
So today's checklist is simple. Do not confuse quiet markets with safe markets. Watch currency exposure. Be selective on IPOs. Respect central banks. And do not buy every AI stock just because it glows in a presentation deck.
That is today's BD Daily Finance News Podcast. If this helped your investing and personal finance thinking, like, subscribe, and tell us in the comments, are you more worried about currencies, AI valuations, or oil-driven inflation?